Good morning, everyone. Welcome to XM Live. XM Live is an amazing service that I wished I had when I started to trade. I started to trade in 2008 and 9, and it took me a couple of years to become successful and finally make out of the experience a profession. In 2012, I became a full-time trader, and I trade since then um, on my own money and for institutionals. Now, again, I wished I had a service like XM Live where 12 and sometimes more experts show every single day how they trade, very transparent, show you what they do, have a track record that you can watch and in a way that is unseen before. I had a difficulty when I started, to learn from YouTube, but you didn't really know who really knows what he's talking about and who not. And so I learned often also mistakes, and those mistakes become very expensive to undo them or until you realized that they were mistakes. And so what I try to do now is here at XM Live is to make your life to success shorter. Look, you will go through some pain. There is a learning curve. For every trader that starts, there is a learning curve, a steep learning curve, and sometimes it's still hard. But I want to make this journey shorter and less expensive. That's my goal. So what I'm doing now is this session is called COT Report Insights. I will talk about the COT report. The COT report is the most important indicator in my trading strategy. And I will explain you a little bit my trading strategy in a second. And then I tell you how the COT report fits in this trading strategy and what kind of signal it gives. And of course, I welcome here all the viewers who are here. You can use a chat if you're an XM Live. If you're on YouTube, you also can put questions in, and I will try to answer everything. Hi, Nandom. So, my trading strategy, and let me give you a small introduction. My trading strategy is built on 4 pillars. The first pillar of my trading strategy is defining how I define the markets. How do I look at the markets? And I look at the markets on 3 different levels. The first level is the fundamental level. Now, it's important to mention that on the fundamental level, I am not trading, but it is an important analysis that I'm doing in order to get an overview. Just to give you a sense how I see the markets at the moment, I see the US government is doing a lot of things. It's a new government since the 20th of January. They do a lot of things and they say even more. And it's a little bit hard to see what this all means for the markets. So I try to focus only on the things that they're doing, not on the things that they are saying. And what I see at the moment, what they're doing is they try to save money. So they try to reduce governmental expenditures, and this is painful for the economy. Why? Because if the government is less spending, less money is coming into the markets. And therefore, this is not very good for the stock markets. I assume we will get a slowdown. Now, again, this is maybe not good for the stock market today, but it might be very good in the stock market in 2 years. When the government gets more slick, it gets more efficient, eventually the outcome could be good. But at the moment, it's painful. So I see US markets a little bit bearish. I see also the dollar bearish because the opposite is happening in Europe. In Europe, there is a lot of spending now. And the reason is, again, the US government, because the US government is pulling off of defense also in Europe. They want to spend less also on defense in Europe. So Europe have to step in, and they have to start to spend. And so Euro starts to spend, and therefore European markets should be stronger than US markets. Now, again, This is the big picture. That doesn't mean that the US stock market is going down this week. The opposite is actually true. I believe the US market is in a downward trend. It started a downward trend, but is at the moment in an upward correction. And I believe stock market could continue to go up. But this is the big picture. Again, it just gives me an overview of general tendencies, and I'm not trading on it. I am trading on my main signal. Now, even at the main signal, I'm not trading directly, but the main signal is the COT report. And this session is about the COT report. The COT report tells it's by the way, a report that is published by the US government. And I can see which market participants are positioned how. So I can see what do hedge funds do, what do asset managers do, and what do retail traders do. And based off what they are doing, I have a preference what I want to do based on their behavior. So I'm reacting on the behavior of market participants. And so the COT report tells me which products I want to trade. So which products, if I want to trade euro dollar, if I want to trade gold, and it's true for the whole week. So the COT report comes out once every week on Friday, and it tells what I want to trade for the coming week and in which direction. So I give you an example. So I want to trade euro dollar. Why? Because in the COT report, I see a clear bias what institutions want to do, and I want to be in their direction. Okay? I want to be long in euro dollar, but that still doesn't mean I will trade it this week. Why? Because here we go to the third layer of my analysis, and this is technical analysis. And the technical analysis will help me to find in timing. So oh, where is my pen tool? Here. This is for timing. So it tells me, okay, I know euro dollar, I want to go long, but I need to have a certain pattern, a certain trend reversal, so I get a good risk-reward ratio in order to enter. So you see fundamental analysis, sentimental analysis, which is the most important one in my trading strategy. There is many other trading strategies, you know, they use only technical analysis. But I can tell you for my 1.5 decades that I'm trading, I started trading only technical analysis. And I found out that this is not enough for me. Why? Look, when you start trading, it seems, here is support and resistance, and it's a clear uptrend. But then you start to dig deeper, and suddenly you see you go into a different time frame, and suddenly it's not a clear uptrend. And what you saw before is maybe just a correction, and you start to get confused because, look, for every technical analysis, somebody is bullish. I can find you a technical analyst who is bearish on the same thing. Again, because maybe he looks in a different time frame, he looks at different indicators, he does things a little bit differently, and he gets a totally opposite conclusion. So technical analysis, in my opinion, it's not an objective tool. By the way, there is no objective tool. Also, fundamental analysis is not objective. And I would even say the COT report is not fully objective. But I believe with those three analyses together, I get some sense of markets should do. And if the markets put me right, I know now I can trade. Okay, so that's the introduction. So fundamental analysis, sentimental analysis, technical analysis, here you have it again in a short form. Now, what do I put here? Oh no, now I see something, and this is quite embarrassing, but I don't have the COT report open. I have the wrong presentation. No, don't it's not so important. The COT report in the end is a report published by the US government. And what you are seeing here is the outcome of this COT report. So the COT report, this is the report. So you get a table, you can download it from the free. If you search in the internet COT report, the first result brings you to the cftc.gov. I'm writing this down for you. And where do I have my pen tool? Just a second here. cftc.gov. This website will publish this report and you can download it. There are 3 reports. The first report is the legacy report. And the legacy report is actually the old report that exists, or you can download it back to the 80s. And then you have 2 new reports. There is a second report that is called financial report, and this exists, I think, since 2006. And then you have the third one, commodities. And again, those reports, here we see the legacy report, so I will delete it again. We have a ton of columns, okay, and a ton of information. So there is really a lot of, also a lot of instruments that I'm not trading, okay? Here we see all kind of products. I'm not trading them. I trade the 50 most liquid products. And normally you find them here a little bit later down, and here you see it. For example, Canadian dollar. And you see there is open interest, non-commercials long, non-commercials short, and there is a lot of columns. I don't need all of them. Some of those columns I even delete, and some of those columns I make certain calculations on them. And the outcome of everything looks like this here. And this outcome, let's bring in here, for example, the euro dollar. Here we are having it. It gives me 3 lines. We have the blue line, and the blue line is institutional money. We are having the purple line, which is dealers or producers. And you see the institutional money and the dealers and producers, they're normally doing exactly the opposite. Why? Because look, when institutions are buying, who is selling to them? The dealer or the producer, right? So if let's say if speculators want to buy gold, who is selling gold? The gold producer, the gold miner, right? So he is selling physical gold, and the institutions, they're speculating that the gold price is going up. So what is important to understand is the blue line are institutional money, and they think like you and me. They want to make money. Whereas the purple line, of course, they also want to do money, but they do it in a different way, not in a speculative way. We speculate on future prices. Institutions speculate on future prices, but the dealers or the producers, they are not speculating on future prices. They are working and they want to get paid for their work. So their operation, their way of thinking is a little bit different. Then we have also the green line, and the green line, this is non-reportables, they are called, but this is small speculative money. This is money that don't have the power to move the markets. Even though a trading account of $1 million or even $5 million, you will most likely still be a non-reportable, because you are actually not, you don't have the ability to move the price, and therefore you belong to this group of small speculators or non-commercials. and non-reportables. Now, what is interesting with this group, as a group, look, you have to understand, so we are looking at three different groups. Each group, you have very, let's say it plain out, you have very smart people, but you have also very stupid people. But as a group, I would say the non-reportable, the green line, they don't know really what they're doing. Or let's put it in another way, the green line.